First question is, if I were a home buyer, would I buy a home at today's interest rates? And the answer is yes. I sold the home that I'd been in for 20-something years, 24 years, and moved into a townhome not too far away. And I bought it in 2023 when interest rates were already high. Now, I was able to buy my interest rate down to 6%. Would have been 6.75, I believe, or 6.5. I was able to buy my interest rate down to 6, but I went from a 3.25 rate to a 6% rate. So I went from having virtually no interest payments on a home because I was, 27 years into a 30-year amortization. 24 years into a 30-year amortization. So my mortgage balance was really, really low. And then when I moved, I decided to take part of my equity and pay half the purchase price for my new home and finance the other half of my new home. So now I have a payment that is just as big as the payment I had on my other home, but I don't escrow my taxes and insurance, but I didn't care. Now, I know a lot of you might be listening going, well, okay, maybe he doesn't have to care, but I have to care. Well, the reality is that you have whatever financial ability you have. And if you can find a home or a place to live that fits your needs, and don't under any circumstances think that I'm saying every person needs to be a homeowner, because I don't believe that's the case. I think in some cases you're not going to be there long enough and it doesn't make sense to be a homeowner, or sometimes people are just not good enough with their financials that they need somebody else to take care and maintain places. And I'm not even judging if you're in either one of those groups. Not everybody needs to buy a house, but some people want to buy a house, and those people, you should still move forward and buy a home, even at today's interest rates, if you can afford the home. So I want you to think about this. Let's just say my home has increased in value since the middle of 2023. Let's say it increased in value, let's just call it $30,000. And let's say that I paid on, let's just call it a $375,000 loan. Let's say I paid 1% more than I thought I should. Well, that means I'm paying $3,500 a year more in interest. So let's just pretend I've been there 2 years. I haven't. It'll be 2 years this year, but I spent an extra $3,500 a year in interest, more than I would have spent staying in my other home. It actually would have been more than that. But my home has appreciated to the tune of $30,000. So $3,500 in additional payments per year is $7,000. New value of $30,000. Now, does that mean I have $30,000 more in cash? No, because I invested money when I moved in it, and I'll have expenses to sell it and things like that, but it's beside the point. My point is that the appreciation of the home has been enough to reimburse me, or will be enough when I sell it to reimburse me for all of the additional interest that I paid. And had I waited, instead of paying $700,000 for a place, I probably would be paying $750,000 for the same home today. So I would have spent $50,000 more, but the interest rate was less. Well, so what? Now my payment is the same as 6.5% interest rate or 6% interest rate as it would have been paying $50,000 more and having a 5% interest rate. Now, I didn't do the math, so if any of you were questioning, you're thinking, okay, I'm going to verify that math, please do that. But I haven't done the math, but the reality is that I would be better off to go ahead and get the home now so I could lock it in at my current rate. I could get all of the appreciation, and then I could be ready to refinance when the time comes. So would I buy a home at today's interest rate? Yep.